today we're going to talk about being at war and being at war in relation to the impact on real estate values. Because, look, we've had a lot happen in the last 2 weeks while I was gone. So, I pulled up some headlines, just headlines you don't normally expect to see. So I saw a headline that said, Iran war bombs housing market. Okay. So, that was like, I was like, okay, that's not a headline I'm used to seeing. What war does to property values? Now that's something we need to dig into. And then here's one that I have not seen ever was how to pick a mortgage rate during war. And so I'm like, okay, we're going to have to talk about this on the radio show. Like there's enough of these headlines and topics out there, and I'm getting enough questions about it from people. And then also you look at within that basic general time span, we also had the conflict in Mexico. Now that wasn't war. A lot of people are saying that's war on the cartels. But we had the unrest, in Puerto Vallarta that happened and many other cities as well. We had we had an employee that was there during that time period. And so, it comes up where as shocking as it is to see these images, a lot of people, I think, have how they describe it. They call it like the NIMBY attitude. And NIMBY stands for
not in my backyard.
Not in my backyard. You nailed it, John. I didn't even prep you for that. And that NIMBY attitude's kind of hard, right? Because we're here, and we don't see those things. But then I think there's certain events that happen that bring it closer to your backyard. Like, for instance, I don't think a lot of people would have called out before and said, oh, yeah, we're going to have a war against Iran. And then Dubai is going to have drones like smashing into skyscrapers there.
Ooh.
And they're going to have, they're going to be, if you've seen the footage of that, you're in what's arguably a very modern city that a lot of people go through and go through to visit or go through for tourism. And then you're having conflict and unrest like this. And so it's like, how is that going to, when our country's a player in that situation, how's that going to get back to us?
Yeah.
And how's that going to affect you in the housing market right now? So the first thing that I put down, and there's about 4 or 5 different forces here that we need to look at. The first thing that I put down is we need to talk about the cost and the supply of goods, because eventually that's going to filter into the housing market.
Yes.
So, a lot of this war, and Iran basically controls the Strait of Hormuz. Hormuz, is that how I'm saying?
I believe so.
The Strait of Hormuz there, where a lot of the oil is transported through. And so one of the big forces that you have is that's going to filter down to energy prices and costs. And so we're layering on top of this discussion the cost of the supply of goods if they have to start bringing those from other countries, if they have to start a longer transportation route to get those, if they were sourcing from certain countries that they can no longer source from. So when we do that, the cost of housing goes up. If the cost of the inputs go up, the cost of housing goes up. And so then we need to talk about that in association with interest rates, because we know how volatile interest rates can be and in affecting the housing market. Yeah. And so when we do that, we look at as soon as the cost of oil goes up, that is going to be a competing force with what people are factoring into what we've been fighting for the last 2 years. Yeah. And that's inflation. So, you want to talk about we have a war against Iran. We've had a war against inflation here that we've been fighting. And so when the cost of oil, if it goes up dramatically because of this, then we are going to see that reflected in the numbers, and it's going to be interpreted as greater inflation. Yeah. And then what do we do when inflation goes up to combat that?
We lower interest rates.
We raise interest rates.
Raise, okay.
Yeah, because they're trying to bring it back down, And so they're not going to lower rates again until they see the inflation numbers come down. So right now, because of this war, we're gonna be battling that with inflation when we see these next quarterly reports start to come out. So what you also have happening on top of all of that is if people think rates are going to go back up, if investors, big, huge institutional investors, if they think rates are going to go back up, they're going to sell bonds. Because what that means, if they're holding bonds in their portfolio, they look at this and they say, you know what? I think Lance is right. None of them listen to me. But I think Lance is right. Rates are going to go up. So if we're holding a certain amount of bonds in our portfolio and those are paying us 4% and we're getting a return on those, I don't want those anymore. If I think interest rates are going to go to 6%, I want bonds at 6%. So that they're going to preemptively sell bonds right now and then wait and hope that they go to 6% and which point then they'll be buying back into. So they're putting more of that into the market. So we have two competing forces here. We have bonds selling, and then we also have prices going up and inflation, which then we're hoping they don't raise rates too high. And as soon as they raise rates, the 10-year treasury goes up, and that's what mortgage rates are really tied to. And when that 10-year treasury goes up, we see mortgage rates increase. So just literally before these conflicts and wars, 3 weeks ago, we had interest rates at a 3-year low.
Yeah.
I mean, John, you heard me. I was like, the spring market in Tri-Cities is here early. It's going berserk. Rates have also at the same time, we've had great weather. Spring market's here early. Rates have gone down to a 3. And so things were popping. And then all of a sudden within that 3-week time period, and I knew this is how the next year is going to be, rates are right back to 6.25. And so you're looking at these swings with your buyers, and I think we're just constantly going to be in this reactive swing throughout the year. And I tell buyers, like, when it's time to buy, have a good line of communication with your mortgage broker. And so that headline that I thought was so crazy, what was it exactly? I don't want to misquote. How to pick a mortgage rate during war. That headline's not that crazy. Because you need to have a very open line of communication with your lender. You need to have a target that you're trying to hit. And when it hits that target, you need to execute and lock in. And so that's different because we're seeing half point swings within a 3-week period, 3/4 swings within a 3-week period. And nothing's out. Nothing's out off the bingo card at this point. I mean, from what we've seen, I think these were events that we were not expecting. So one of the things we've been talking about is what is happening with home prices during conflicts and and worldwide conflicts with war. And I think one of the things that starts to happen is people look at value long term, and investors are really good at this. This is kind of where you come in, the difference between investors and I would call it end user purchasers, like a single family home purchaser. So an investor will look at a projection, and a projection is basically predicting the future, right? So we do prediction shows on the show. We talk about what that looks like. Yeah. We take a lot of information. I try to take scientific values and numbers and come up with a prediction, but it's still just that. No one knows for sure. Like we've talked a lot on the show. I've said a number of times, it wasn't on my bingo card, we'd be in a major war conflict. Yeah. Or extended training exercise. Sorry. And so we've talked about that, but security increases value. Yeah. If people feel that they have long-term security, they're going to associate more value with that asset. And when people are not secure, if they're not secure about their job, they're not secure about they're not secure about the condition of a neighborhood, they're not secure about a major weather event. It can be any number of things, but the less security there is, there's going to be an adjustment for pricing. Yeah. And so I wanted to, I'm going to geek out a little bit on some of this stuff. And it's probably too much, but I tried to find some very scientific data about what happened in these situations. And so I came across, there was a report that was done in Poland. And for all our Polish listeners, I don't think we have a ton of them. But for all of our Polish, there is one of the cities. I'm just going to spell it. It's Szczecin, and I don't do well when there's that many consonants in a row. I mean, Szecin,
something like that.
Too many consonants for my dumb American to say. But the data, there was a study that was done 2 years after the Ukrainian war broke out, and they looked at how that war was affecting prices. And if you have trouble falling asleep, for people that aren't in real estate, it's like a 20-page PDF. It's fascinating and very well done. But what they were basically there, and they're adjacent to the Ukrainian war, geographically. And so what that was done, the end result, when you dig through all the pages, and I had a lot of time on an airplane to read through some of this stuff, but at the summary of this, at the very end, is that prices did not necessarily decline because of the war. But what happened is the number of buyers and transactions in the market went down. Okay? And there's probably 5 or 6 factors that all factor into this equation, but that's a big one. And I've said it before on the show, and one of the things that study backed up is that study backed up and said that if people believe something is a short-term disruption, they won't make a decision during that disruption. And I've seen that all the time, meaning that they will, rather than lower their price, unless they're forced into it by a life event, they lose their job, transfer, illness, unless they're forced into it, what they will do is they will wait out the event. Yeah. They will refuse to lower prices, and that's what they saw happen. This city was a city of, I think I looked it up, was like 1.6 million. So it was medium-sized city, and they chose during that time there were not a lot of sellers that lowered prices because of the war and the conflict, but they held on to the property. So whether that's in our market, turning it into a rental. I mean, we have a lot of people, more so than I've ever seen in my career. We have a lot of people contact us to rent out their home because they're doing a job transfer for the next 5 or 6 years. So meaning they're moving to another state, but it's just for the last 6 years of their career, and they think they'll come back to Tri-Cities. So they're taking advantage of the fact that they have a very low interest rate. They can rent out a property, cover their mortgage, and then when they come back, they have a house here that they know they like, that they've lived in, they know they like, and they have a place to land here. And also going into retirement, a lot of those people that are doing that are sensitive to what their monthly cost is going to be in retirement when they're on a fixed income. Yeah. So that kind of brings me to my next point, and that is, when that happens, and this is what we've seen happen with people talking about affordable housing, when that happens, the supply falls. Okay, so once again, competing forces. People are not putting the homes on the market. If you have stability in other sectors of your market, like you still have job growth, you still have people moving for tourism, and so when that happens, you now have less people putting their homes on the market, so supply falls, and that's what helps hold prices stable. Because a lot of people are looking at, if you look at doomsday or headlines and what happens, people are like, there's going to be a correction, there's going to be a massive correction, and this is what we were talking about. We're going to be at war, and then prices are going to drop dramatically. Well, remember, and they always waved the flag, remember 08. The difference being what we had happen was we had massive oversupply, and we had people that didn't have equity in their homes. Those were the two very different factors versus this market. Now what we have is we don't have a massive oversupply, and everyone has equity in their homes if they bought in the last 5 years. They have an equity stake. So when that happens, they can choose to hold, and that's what they do. They turn those into rentals, or a family member moves into them, or they keep them as a second home. And so because of that, we don't have a huge oversupply. And so the illustration I use of the person moving somewhere to finish their career for 6 years and then renting the house so that they have a house to come back to is the same warning that I give to first-time home buyers and people out there. It is becoming, I think everybody agrees with this, it is becoming harder and harder to buy that first home. And that first step is so very important. And a lot of people don't realize this. And now they're delaying that. We saw the Realtor.com study come out a couple months ago that the average age of the first-time home buyer is now approaching 40. I think it went up to like 39 and a half for like the first time. Where a lot of people in the past, when that age was lower, 28, 29, they had 10 to 12 years of equity gain. That is very, very hard to get that back. So the time value of what you can increase in your equity is super important. And so I think the summary as we wrap up today is, especially in relation to these first-time home buyers, is that if you need a house, and you have the financial means to do it, waiting is probably not the answer. Like a lot of times, if you can pull the trigger on that sooner rather than later, even if you don't like the interest rates, you can refinance lower. What you can't do is you can't come back and rebuy at a lower rate in an appreciating market. And all signs are pointing towards appreciating even during the wartime. It's just the pace of appreciation that has slowed. And so I point that out to people. We work with a lot of first-time home buyers. We have first-time home buyer classes. So if people have questions about that, they can go to kenmoreteam.com and get with somebody that we'll put you with somebody that can show you that path and what that looks like.
And make it understandable.
Because I think amongst all of the insecurity, people use their home as a place of refuge and security. And so people are like, where am I going to feel secure? What's going to give me that feeling? How can I recreate that? And that's what people are trying to recreate in that situation. So that's the bottom line on what's going on with local prices. The market's moving. A lot of calls. We're evaluating a lot of homes that people want to get sold. There's great spring inventory. It's an exciting time of year because inventory does start to release up a little bit for people that were waiting to sell in the spring. So there is a little more competition, but there are options coming that don't exist right now in the market in the next 30 to 60 days.